Hi, I'm Ben and welcome to Motivation to Invest. Our mission is to motivate you to invest for your financial freedom. Whether that means escaping the 9-to-5 drudgery or just improving your quality of life, I'm here to help you by providing you with valuable investing tips and strategies. Due to the recent global issue, which shall not be named, the economy has stalled and the stock market has taken a major hammering. Is the world about to end? Or is this the greatest time to invest in some bargain stocks? If you believe, like me, that the economy will recover as it has done so many times before from previous recessions, then now could be a great time for you to start investing. Etsy is a popular online e-commerce platform where people go to buy unique items, arts and crafts, and vintage goods. 2019 was a massive year for Etsy, in which they achieved a record revenue of $818 million, with gross merchandise sales of over $5 billion. However, as the global pandemic has caused a stock market crash, consumers are going to reduce spending. So are shares of Etsy doomed? Or could Etsy be the next Amazon of the arts and crafts market? In this video, we're going to find out. I'm going to do a full stock analysis of Etsy and delve deep into the detail of this company. I'm also going to inform you whether I personally have purchased shares in the company. Let's dive in.
Coming in, flex, I just wanna win.
Before we get started, go ahead, smash that like button and subscribe if you haven't already. Be sure to turn the notification bell on, that way you'll get notified when I release future videos and stock picks. It's good to be first on the scene when an interesting stock is at a great price. Etsy has a real online community of over 2.7 million sellers and over 46 million active buyers. People purchase from Etsy as opposed to Amazon due to the vast selection of unique items available, which many items can even be tailored to fit your needs. In a recent survey, 88% of buyers on Etsy indicate that the goods they purchase could not be purchased anywhere else. Now that is definitely a unique selling point. So how does Etsy make money? Over 70% of Etsy's revenue comes from seller listing fees and online transactions. The rest of Etsy's revenue comes from optional value-added services, such as advertising or discount shipping labels. So how big is the unique products retail market? Etsy has estimated the market for unique hobbycraft items to be worth approximately $100 billion per year. So it's clear that Etsy has plenty of room for expansion. These market figures are expected to grow to $170 billion per year by 2023. So how does Etsy plan to grow? How does Etsy plan to take advantage of this massive, unique hobbycraft item market? Well, during an investor event back in 2019, Etsy discussed 3 ways in which its business strategy is planning to implement growth. The first growth lever they could pull would be to increase the number of active buyers via improved social media marketing, SEO, and even good old-fashioned TV ads. The initial results look positive, with active buyers growing by 17.5%. The second growth lever they can pull is to retarget previous Etsy customers who have only made one purchase per year, with automated emails and special events designed to entice these past customers to purchase again. Third growth lever they can pull is to increase the average order value, similar to Amazon's setup of frequently bought together items, which prompt buyers to purchase multiple extra items. So all was looking sweet for Etsy and its share price was practically flying. But then the global pandemic hit. Etsy has adapted fast to the new lockdown environment by offering various DIY hobbycraft home projects for people to do. They have also been encouraging the sale of essential supplies to help with the pandemic, from homemade face masks to hand sanitizers. This is definitely a company which is turning lemons into lemonade. So what about debt? Well, it's vital before investing into any company that you check its level of current debt especially. You want to know, can the business meet its short-term obligations, especially if you're investing in the company during a recessionary period. Reviewing Etsy's balance sheet, it's clear to see that they are looking healthy and they have plenty of free cash on hand to weather this storm. They have even been using 817 million of their spare cash to help their sellers out by removing upfront ad fees. In addition, they have even been spending money on advertising to entice in new business. Now that shows a business which is in a comfortable position. Deep diving into the stock here, we can see that Etsy is trading at 12.1% below its fair value, with its earnings forecast to grow at a massive 29.31% per year. In previous years, Etsy's earnings grew by 23.8%. However, it does say it has a few risks. It says it has a high level of debt and a highly volatile share price over the past 3 months. Now, this volatile share price will be due to the global pandemic and stock market crash, which is expected because there's been a lot of purchases and a lot of sell-offs. So I wouldn't worry too much about that, as that'll be common for all stocks in the stock market at the moment. It is a very volatile time. In terms of the other risks, they all seem to have been passed. They look pretty good. We'll just further investigate this debt. Moving on, we can see here share price versus fair value. So this software has calculated the fair value of Etsy stock to be approximately $75 a share. Now it's currently for sale for $69 a share. So it is still below fair value. For a company which is not really majorly affected by this issue, yes, consumer spending is down. However, they pivoted their strategy, and a lot of the Etsy sellers were selling products related to the current issue, such as face masks, hand sanitizer, etc. So I believe it's still a great purchase even at this price. So this says its PE ratio is high compared to its earnings. So that's just something to just be aware of. The online retail industry average. Forecasted earnings growth 29.3%. Future return on equity, 3 years' time is forecast to be 46.7%, which is fantastic. Historic earnings growth 65.6% annually, which is incredible. So you can see its earnings there. Its earnings are here, and its revenue is obviously steadily increasing. It says Etsy's return on equity is high, but it does say it has a high level of debt, so we will check that up. Return on assets. The company has got a high return on assets, which means for every, say, dollar invested into the business, into its assets, it has a good return for investors. So the high debt levels this software highlighted are actually not a major issue when the financial position analysis is closely looked at. As you can see here, the short-term liabilities and the short-term debt is really what you need to be looking for, because can this business meet its current, which was to say within 12 months, obligations to pay all of its debts? And from looking here, you can see that it has only 188 million in liabilities or debt, and it has over 921 million in assets. Now that could be free cash flow, that could be inventory. Over the long term, it does have slightly more liabilities than assets. Now, that could also be because it's an online e-commerce platform which doesn't have as many offices and real estate as, for example, a chain such as, say, McDonald's or Walmart or any of those type of businesses. It's an online business. So this debt, even though it does look high in the long term, it is long term. So it's doesn't have to be paid right now. And I believe that they will be using this to scale. So I wouldn't worry about that too much. This is the real problem here. You've got to check for the short term. And the short term liabilities are fine. Because obviously we're going through a recessionary period at the moment, and you want to ensure that the business can repay its current. Okay, now this is a little bit worrying here. Insider transactions. So there has been quite a few sell-offs from the 4th of March to the 17th of March from these people who are obviously inside the company. So let's have a look who they are. So we've got Jonathan Klein, independent director. So he's the director. Martha Burns, she's a director. And Jill, I don't know who that is. But okay, so 2 of the directors here on the board have sold off quantities of stock. Now that is a worrying sign, because when you invest into a business, if the board has faith in their business and that it's going to grow, then they wouldn't be selling off, because if anything, they should be purchasing more shares at a lower price. However, these tend to have been selling off. Now, this could be for personal reasons, it could be for employee payment reasons, but it's still interesting to see. So Jonathan, he sold his shares at $47 a share. Jill sold hers at $60 a share. So if we just check what the price is today again. So it's back up to $70 a share. So they've actually made I wouldn't say a great decision in the short term anyway, because as you can see here, if they would have just held on for a little bit longer, they would have actually, their shares would be worth more. So perhaps it was a sign of panic or another reason. Perhaps they saw the whole market crashing and thought, right, we need to sell. But yeah, that is a little bit worrying, but it's just something to take into account when you're doing your evaluation. And overall, Etsy is a great stock with a solid community and powerful brand, known as the #1 place to buy hobbycraft items online. With previously forecasted revenues of over 30%, Peter Lynch would call this a growth stock. Its asset-light business model and strong margin of safety offered by its lower share price makes this business a strong buy for me. So I did purchase shares in Etsy. I purchased these shares in Etsy with a long-term view that when consumer demand picks back up, it should be able to meet its targeted growth rate of 20%. I would love to know your thoughts on Etsy as a business and as a stock, so please do comment those below. Be sure to check out my other videos where I analyse 5 stocks I purchased during the previous stock market crash, which has seen me up by £1,000 in just 7 days. Now, as a long-term investor, this increase doesn't really make a difference to me, but it's still nice to watch your portfolio grow over such a short period of time. This suggests a possible V-shaped recovery from this recession. I also have a video reviewing the free trading apps which make it really easy to get started investing. I've included a couple links below which will give you a free share when you sign up. But remember, on this channel we don't give financial advice. So please evaluate the stock yourself, research it yourself, assess your own investing goals and your own budget before investing into any stock we mention on this channel. And if you enjoyed this video, go ahead, smash that like button and definitely subscribe. See you next time.
Coming in, flex, I just wanna win.